Hi, this is Mani from BSc to NSE.com. In this video, I'm going to talk about a very easy trade, even though normally people tend to think of option selling as very risky. The expiry day options trading, especially the 2:55 p.m. trade with just 20-30 minutes to go, is an extremely favorable trade for an option seller. 50 points away from Nifty spot price, so I'm gonna put the important points here. The initial 1 or 2 months, you can just watch how load the chart of options, which is 50 points away, and just watch how the price behaves at this time. And then once you're comfortable, then you can start trading. Okay. So basically, the trade needs to be entered between 2:55 p.m. to 2:58 p.m. and I'll tell the logic why later through the video, and which is why I call it the 2:55 p.m. expiry day trade. So what we have to initially do is, the first question that I normally get is, which strike price should I choose? So in this strategy, the strike price that you'll choose is 50 points away from Nifty spot price. The keyword away is stressed here because you need to pick the out of the money contract in either the call option or the put option, so whichever you like, or both. So for example, if Nifty is around 8155 in spot price, or the equity price that people normally know, you can choose 8200 call, which is out of the money, and 8100 put, which is also out of the money, or both, to short with just 30 minutes to go. And the reason why we choose 2:55 p.m. is because the closing price for Nifty or any stock is taken as the average traded price between 3 p.m. to 3:30 p.m. So as soon as the clock hits 3 o'clock or 3:01 or 3:02, immediately you will see a dip in options premium, whichever is out of the money. And as a seller, 50 points away is where you will get good premiums to short. If you are trading with really high capital, then you can choose 100 points away instead of 50 points away, where you will get less premiums, but it's more like 100% or 99% sure that you will end up in profits. So like I said, if the spot price is 8155, we will choose 8200 call or 8100 put. If you're not clear of what out of the money call option or put option is, then try and Google and find the logic, but I'm sure most of the options traders know what it is. So like I said, we'll enter at 2:55 to 2:58, because as in this 3-minute time frame, when we enter, as soon as the clock hits 3 o'clock, which will be just 3 minutes from your trade entry point, the options premium 50 points away will just drop rapidly, and normally between 2:55 to 2:58, with just 50 points away, or sometimes it will be 25 points away or 30 points away, because let's say if the spot is 8170, you will still pick 8200 call, because 8250 will be 80 points away. So you can still pick 8200 call and you can short it. So sometimes you will get a premium of around 4 rupees. Sometimes you may get 8 rupees if it's only 20 points away or 30 points away out of the money contract. So you can still short it around 2:58. If the points is less, you can choose to short even at 2:59. So you will still get a higher premium to short, and short it as MIS, because you will get additional margins, especially in Zerodha. You can short Nifty call option today at a cost of only 6,000 rupees. And when you're shorting as MIS, options premium of around 4 rupees to 6 rupees, this will mean that you can make around 2% to 3% returns quickly in less than 30 minutes, and which is extremely good returns. This will be yearly around 24% to 36% returns if you just do this one trade in a month, and if you do it through the year, all 12 months. And the logic is, how to restrict the losses. It's very simple. If you shorted at 6 rupees, then you immediately set a stop loss at 12, and I'm pretty sure 11 months out of 12 months it will not hit the stop loss. And within 3 minutes, as soon as the clock hits 3:01, which is the key time, you will see the options price immediately drop, which is in case of out of the money contracts alone, So for beginners, don't pick a in the money contract and try and short it, and don't be wondering why it didn't go to zero. So you have to pick out of the money contract, and I'm pretty sure most likely the spot price in Nifty will not spike within 3 minutes, and you will see within 3 minutes you will go into profits. Literally, I would say the options premium of 6 rupees to 4 rupees. If it's 4 rupees, it will drop down to 1 rupee by 301, as soon as the clock hits 3 o'clock, by 301, 302. And the reason for this is because the fact that the closing price at 3:30 is taken as the average traded price between 3 o'clock to 3:30. It's not the 3:30 traded price, so it's actually the average traded price between 3 o'clock to 3:30. So as soon as the time gets into crosses the 3 o'clock time frame, if the spot price is below, or if the spot price ensures that the contract that you're shorting is still out of the money, the premiums will instantly drop. Okay, so you can just watch it. Tomorrow is the expiry. You can just watch and see this behavior, and you can probably even try with just 1 or 2 lots. And remember that somebody who has a 1 crore capital can very easily make 2 lakhs to 3 lakhs in just 30 minutes. So as retail traders, we normally tend to think that with 1 lakh rupees I can make only 2000, or with 20,000 rupees I can make only 400 rupees. So what's the big deal in it? So that's just the psychological way of thinking. Since we are trading with lower capital, for us it looks an unattractive trade, but in fact it's actually a brilliant trade where within 30 minutes of time you get to make 2% to 3% returns. So this is something a full-time trader can look at, because 2 to 3% returns in 30 minutes is simply superb. And by selling 600 800 points away at the start of the month, you can make around 2% returns. So just doing these two trades, somebody can very easily make 5% returns a month. And again, like I said, in this trade especially, it's very easy because you can set a stop loss immediately. So even if it hits 1 month out of, or 2 months out of 12 months, you will still end up comfortably in profits. So again, you'll need a discount broker like Zerodha to do this. So I'll strongly suggest you to consider Zerodha as your trading broker, and I'm an authorized person for Zerodha. You can go to bse2nse.com and fill out the form if you're looking to open an account, and you also get a free training and other benefits from my side if you're opening through bse2nse.com. So ensure to fill out the form in bse2nse.com first if you're planning to open an account, and that's it for now. Subscribe to our YouTube channel and stay in touch, and I look to keep sharing and keep making more videos. And any comments, any queries, you can post on this video. If you made a successful trade, let us know by posting a comment on this video, and it really motivates me to keep posting more videos. Thank you. Bye bye.